guys, welcome back to another video. We're finally back, we're better, we're stronger. So in this video we're going to be taking a look at how to identify if my point of interest, such as my institutional candle or supply or demand zone, is going to hold or not. So we have confirmations for pretty much nearly everything, but a lot of people, when they approach a zone, they don't know if my candle is going to hold or not. They've already been able to actually identify the candle. That's the simple part. But is the candle going to hold or is it not going to hold? That is the mystery, and that's what I'm going to help you solve today. I'm going to give you a couple of tips and tricks and actionable steps that you're able to take to see if that candle is going to hold or not. So make sure you watch the video all the way through to the end, because I'm going to be dropping a lot of value for you guys as usual. And as well as that, if you haven't already, make sure to follow me on Instagram, my personal account, and also follow the company page as well. We are posting a lot of value on those pages, so yeah, it's not something that you want to miss out on. And also we have a couple of announcements here and there coming up, so definitely don't want to be missing out on those whatsoever. As well as that, lastly guys, our signals package is finally live by request of many people. A lot of people want to get access to the trade ideas personally from me. So if you're interested in getting access to my trade ideas and the signals that I take, make sure to head on to fuacademy.io and get purchasing that package, because yeah, we're going to kill the market this month. So yeah, let's get right into the video. Alright, so how do I know if my level is going to hold or not? I'm going to break it down into very simple steps, actionable things that you're actually able to follow and also able to backtest. So one of the most important things, you have to understand that the difference between the higher time frame point of interest and lower time frame point of interest, obviously the probability and the fact that the higher time frame points of interest have more higher probability that are going to reject, or price action is going to reject and reverse, or just reject and continue in that direction. But most of the time we're going to get some sort of rejection, whereas a lot of the lower time frame point of interest, for example like a 5-minute institutional candle or like a 10-minute institutional candle, prices are either going to tap into it, reject or reverse, or it's just going to go straight away, just completely blow through it. But a lot of the time with these higher time frame point of interest ones, they're stronger, okay, they're much more stronger, and they're higher probable, so we can expect some sort of rejection or some sort of reversal from them. Now, how can we tell if this level will hold though? So for example, right here on the DXY, right, we're taking a look at the weekly time frame, and we have this weekly institutional candle right here. Okay, so we're looking at this for quite a while now, and price has tapped into it, and what it's done, if we break it down to the lower time frame, what it's done right here is it's tapped in, reacted, and it's formed two strong bearish engulfing candles for us. Now, one of the first things that I usually look for in regards to seeing if that level genuinely is going to hold and the supply is going to be respected and we're going to get a shift in momentum and a reversal to the downside is looking at my breakage structure. So if I get that change of character and my first breakage structure where my basically my most recent low gets broken or not, and that's one of the main things that I'm going to be looking at. So breakage structure is one of the first things and one of the first signs that's going to tell you if this level is going to hold or not, and if we're going to get that reversal in the opposite direction or not. So right here, I'm going to use the replay tool just to kind of make sense of everything right here. So where I would have wanted my breakage structure to occur would have been this low right here. I would have needed to see on the daily time frame at least this low to be broken in order to give me some sort of confirmation if price is going to continue to the downside or not. We've had two strong bearish candles right here. Okay, two strong bearish engulfing candles, but we haven't broken any structure. So a lot of time what will happen is, okay, and this is exactly what happened in this scenario right here, is we play up into the point of interest and we simply reject, but this rejection is simply just exhaustion right here. Okay, and we start seeing some selling momentum. Okay, a little bit of selling momentum right here, and all this selling momentum is it's simply a pullback. And that's exactly what we have. So this pullback, and then price straight away just continues up, but it fails to break our structure here. So here what it's telling me is we have not been strong enough, the sellers are not strong enough in order to fully switch and change the momentum and shift price action to the downside. So they've failed and they were incapable of doing so. Okay, so there's still buyers right here, and the fact that we have got the buyers coming in right here, okay, from the two bullish candles that we see right here, we can still see that even though yes, they're somewhat exhausted right here, but they were ready to come in. Okay, they are ready to come in at discounted prices. So we take a look at the fib from this low to this high. Okay, the minute we pull back into the 78.6, they're ready to start buying again from the discounted prices, right? The 786 level. Okay, so that was one confirmation right here that this level for me would not hold. Okay. And we get rid of the replay tool, and you can see this level hasn't it hasn't held right here. Okay, and we still failed to break structure. Now, can this level still work out? Yes, for sure. And this actually brings me on to my next point. Now, really quickly to recap, our first point was that if price taps into our high time frame point of any point of interest for that matter, and it fails to break structure, that is a sign that potentially price is not ready to completely shift momentum, and it might continue to the upside or might continue to the downside dependent on what you're looking at. Now, if price though, if we have something like this where price fails to break to the upside and it also fails to break to the downside, and price is just consolidating, so all we can see here is just lateral price action. So price is moving horizontally, it's not going up, it's not going down, it's not breaking any structure. What we could potentially start seeing right here is the early phases of an accumulation. Okay, so what's happening right here is smart money is accumulating orders. Okay, they're accumulating orders right here in order to shift price to the downside. So what you can potentially see right here is liquidity build up on the bottom, liquidity build up on the upside, and eventually what you'll get is the early phases of the white coffee event. Okay, so the accumulation, and then what we eventually get is, you know, the uptrust, or yeah, you might just get the uptrust right here and another push up into deeper into the point of interest, potentially like the 50% of the point of interest, and that could be your UTAD, and eventually you get that break of structure, or you might potentially get, you know, first of all the major sign of weakness, and you eventually get that break of structure, and then when we push up, get that clear of liquidity on the top side, my UTAD, and then boom, retest, test of the UTAD, and continue to the downside. So that's something that could potentially happen. So a lot of the time, if we start seeing consolidation, okay, around my point of interest, even though it failed to break structure for me right here straight away, failed to break structure right here for me straight away, the fact that I see consolidation around my point of interest, okay, is telling me that potentially now the large operators are getting ready to start accumulating orders in order to now shift price to the downside. So this is interesting for me. They're building liquidity on the upside, they're building liquidity to the downside. So a lot of time, based off the three market phases, what we can potentially see is price clearing upside liquidity first of all, okay, and then eventually clearing the downside liquidity after. So the three market phases is something that we discuss over and over again. Clear the liquidity on the top, then eventually clear the liquidity to the downside. So this is the lateral liquidity. Okay, that's something that you could potentially see. So let's recap again. Point one, if we fail to break structure straight away, this could be a sign that price is not ready yet to fully reverse. But on the opposite hand, our sign number two is if it has rejected from a point of interest, and also even though it failed to break the structure here, if it came back up and it actually failed to create that higher high and and failed to invalidate that supply, because as long as we're still within that point of interest right here, okay, as long as we're in that point of interest and we didn't break this high, this is still valid for me. So on the contrary, right here, the fact that it's consolidating right here could be a sign that this potentially could work out, okay, because we're accumulating orders to look to send price to the downside. So this could potentially work out. Now, this could simply be also a reaccumulation as well, okay, where we're accumulating orders right here in order to send price higher. It's very, very difficult to actually tell the difference between the two. The best kind of indicator that's going to help you understand if price continue to the upside or not is by doing your fundamental analysis, okay? But we're taking a look at things from a complete technical perspective. So here we understand our first two signs. One of them is a sign that potentially price will not reverse. One of them is a sign that potentially will reverse. Now, another sign right here is, let's say we have a point of interest, and let's just go on to a whole different, let's just go on to like a whole different pair right here. So I'm going to take a look at, for example, I'm going to take a look at, it's actually a decent enough example right here. So let me get that quick. So here, I'll just bring you to your JPY. So let's say, for example, we're looking at a buy from this institutional candle right here. And, you know, blah, blah, we have the structure, we have the structural break, etc. We have the clearance of liquidity to the left. So we're taking a look at the buy. Now, what price action, literally the current price action, what it can tell me right here is if this institutional candle is going to hold or not. So we're taking a look at this price action, and what we're doing here is we're simply taking a look at the candles on its own. Okay, now there's a brilliant way to truly know if your point of interest is going to hold or not, and that's by looking at the order flow footprints, because that literally uncovers the true intent, okay, behind those candles. Because a lot of time you're going to be able to see, for example, sellers are very aggressive in a candle, but it's not going anywhere. Okay, and sometimes you're going to see that the sellers are very and sometimes that you're going to see that the sellers are actually, there's not much sellers, there's not actually much selling contracts within a candle, but the candle is dropping a lot. So a lot of these things you're not going to be able to see, okay, other than actually being able to look at the order flow footprints and being able to see exactly the amount of contracts that are in these candles. And you're going to be able to see the passive and aggressive selling that's occurring, or the passive buying or aggressive buying that's occurring within these candles. And that's going to tell you the true intent of what's happening, if there's absorption occurring, if there's exhaustion occurring, etc. That's a bit more advanced, and that's something that we just take a look at. It's a whole different thing that we take a look at. Okay, so you can take a look at it from that perspective, and yeah, that's pretty much going to give you everything that you need to know. By looking at the order flow footprints and understanding the order flow footprints, it's going to give you everything that you need to know in regards to if your point of interest is going to hold or not. But if you don't trade the order flow footprints, if it's something that you don't want to learn, etc., there's still a lot of signs and confirmations that you can take a look at from a price action perspective, and that's exactly what we're doing right here. Okay, so another one right here is if we have no order flow confirmation, etc., we're simply just looking at the close of the candle. And one thing that I want to avoid is if the candles are increasingly getting larger as we're approaching my point of interest, then for me, I'm much more cautious of that point of interest actually working out. Because if the sellers are getting stronger, okay, and stronger as we approach, now here we don't actually truly know if the sellers are getting stronger or not, because we can't see exactly what's behind the candle. Just because the candle is huge doesn't mean that the sellers are in control, because that's something that you need to understand. And this is something that, you know, price action lacks. Okay, the technical analysis side from price action alone, this is something that it lacks. Okay, but we're going based off that assumption anyways. Okay, we potentially can just take a look at the volume instead, the volume profile. It'll be a good way to kind of it'll be a good indicator for that sort of thing. All right, so as price approaches my point of interest, if the candles are getting bigger and bigger, okay, and there's much more selling momentum to the downside, I'm getting cautious of this. So that's exactly what we have right here. See this? So as the candle went down, it was getting bigger, and a very big selling candle right here, very strong selling momentum. As we approached my institutional candle right here, I would have not looked at this institutional candle at all, and as you can see, it did not hold whatsoever. Yes, we reacted somewhat right here, which is what happens a lot of time. We will react from the point of interest. But if you are smart enough to look at the momentum, okay, if you were looking at the momentum right here of this whole move, you can see that the momentum to the downside was very strong, and this is why I would have avoided this point of interest right here. And for me, I would have wanted to see at least a larger point of interest, okay, but that's just a whole different confirmation for a whole other video. It doesn't really apply to what we're talking about right now. Okay, so as you can see, that went just straight through it. For me, what would have been a better way to buy from here is potentially strong momentum at the start, and as we approach our point of interest, the candles are getting increasingly smaller, showing that there's less and less interest. Okay, less and less interest for the sellers to be selling right here, and the buyers are potentially now starting to get into the market. Okay, so as we approach here, I want to see very small candles, and then I'd look to buy here. Okay, so that's another confirmation that I would look at. Alright guys, so that is pretty much it for this video. I tried to make it short, sweet and simple for you guys. Now, if you gained literally one valuable thing from this video, make sure that you go down, smash the like button right now, because whether you believe it or not, it helps me a lot. Also make sure to subscribe and leave a comment down below to let me know what tip helped you out the most, or if this kind of works for you or not. And yeah, if you have any questions, make sure to drop them in the comments down below as well. I'll make sure to get answering as well. Alright, have a good day guys, and I'll catch you on the next video.